Welcome to Web3 Watchdogs, the podcast that takes a deep dive into the world of Web3 security, compliance, and risk. Join Michael Pearl as he interviews executives from across the Web3 industry to uncover the challenges and opportunities of this rapidly evolving space. Web3 Watchdogs is sponsored by CyVers, your one-stop shop for Web3 security and threat mitigation. CyVers harnesses the power of AI to eliminate hacks, scams, fraud, and compliance challenges in real time, and even before they happen. For more information, visit cyvers.ai. That's CYVERS.ai.
Hello, everyone, and welcome to the Web3 Watchdogs, the podcast that goes into the depths of anything security, compliance, risk, fraud, and scams. And today we have a very special guest, Katharine Wooller. Katharine is a board advisor at various Web3 companies. She has worked at CoinCover, she has worked at Daxi, she has worked with several VCs, and we'll dive into that in a second. Katharine, so why don't you just tell us about yourself?
Oh wow, okay, that might take a while. Yeah, look, I'm hugely positive about the Web3 space. I've been in since about July 2019, so I bought my first very small amount of crypto, a bit of Bitcoin, that lovely crypto gateway drug, in summer 2019 at around 10k. So obviously a very happy lady. As we're speaking, it appears that Bitcoin is convincingly holding 100k. And I think, sort of for any other industry, that's not a long time if you're a hairdresser or a mechanic, but sort of 2019 to now is sort of forever in terms of crypto. And I'm really proud to have worked across quite a lot of sort of sub-verticals within our space. So as you mentioned, I headed up Europe for an exchange and tokenization engine. I've worked for a health tech that uses blockchain. I've done a bit of cybersecurity, Web3, so great to chat today about sort of some of those themes. A bit of work in sort of the VC communities focused on AI and Web3. And I currently hold a board director role for a digital asset legacy company. So essentially what happens to your crypto or NFTs or any other digital financial instrument of any value on your death and sort of passing on to your loved ones. So I've done a fair amount of sort of board work and then work in the space now. I know that you're mostly talking about compliance and risk today, but most of my career, of course, has been very respectful to those themes, but I've mostly focused on sort of strategy, sales, marketing, biz dev, those themes. But of course, when you work for very innovative and early stage businesses that are hyperscaling, you sort of wear a lot of hats. And I've got to do some really cool things, whether it's talking to regulators or standing on stage at kind of trade shows or, podcasts like this. And really I've just spent a lot of my time talking to people in our ecosystem, whether it's governments or the press around sort of what's going on to spread the word. So really, it's been a phenomenal journey. I sort of remember when our industry, the whole of us, everyone would kind of fit into one conference room in Las Vegas, and Vitalik was kind of just wandering around and you could have a coffee with him and pick his brains about, what the future would look like. And I think it's been interesting because kind of at that time when I first got in, actually our industry was a little bit taboo. I remember mentioning to a family member at that time that I'd bought literally a couple of $100 worth of Bitcoin. It wouldn't have stopped me feeding my family. I wouldn't have, lost my home over it. And I actually got quite a rude email about, sell it, it's dreadful. And a lot of that kind of press dialogue, there were kind of phrases like, oh, it's rat poison, or, crypto is only an index of money laundering. So really, people like myself and you, of course, it's been an amazing journey to have that front row seat in our industry growing. And for me, I came from a TradFi background, so I got to go into some of the world's biggest institutions, and I was kind of probably a little bit awestruck by, they had amazing pedigree and they had amazing foyers and the toilets were really posh and the coffee was lovely. But actually, if you got under the skin of some of that technology, it was really antiquated. The sales cycle was so slow for anything innovative. And really, I think I was probably part of that tsunami of talent that was just hemorrhaging from TradFi into DeFi. And I think that has increasingly happened over certainly my time in TradFi. And I think my career and many people like me have really seen what's happening now at that intersection of TradFi and DeFi. You take the best bits of both systems, and of course that's hugely relevant from a sort of compliance and risk perspective.
It's interesting what you've just mentioned, this phenomenon of people talking about crypto as if it's only used for money laundering and, funding terror and crime. And nowadays, you see so many TradFi people, as you've mentioned, moving to crypto. And you see, if you scroll down, almost any prominent profile of a web executive, you will see a TradFi background. So I think it's a huge vote of confidence.
Yeah, definitely. And look, I think, long gone are the days where if you worked in DeFi, you were a degen pirate and I would share the stage with people that, headed up a DAO were saying things like, well, there will be no banks next year and we're above the regulation. You kind of just used to cringe, really. So I think Web3 to me is a hugely empowering message. It's a totally new way of thinking about finance and payment systems and wealth and how, a central bank digital currency should work. And that has given, that's some really blue sky thinking, right? You go back to sort of the birthplace of our industry. But today we have an amazing community, a fabulous ecosystem. If you're listening to this podcast and you're kind of considering whether you want to work in the Web3 space, my opinion is that it's a fabulous industry to work with. I've certainly tried my best to sort of give back and focus on D&I in all its forms. And I think, to your point, we've just come such a long way in terms of credibility. I remember there used to be a WhatsApp group on my phone of people that I worked with in an exchange. And if crypto was in the mainstream press, we'd be at home on a Sunday night on the sofa going, oh my goodness, they're talking about crypto on BBC World News or CNN, because it was so exciting. And now, obviously, we don't bother because it's kind of there every day. And, to be a serious asset class, the day we're recording this podcast, we're at $3.6 trillion. It looks like Bitcoin is holding 100,000 K. Hopefully Ethereum can kind of follow suit and keep hold of that mark. But I think there's some huge sort of very interesting trends coming down the track, particularly in the AI space. So the overlap between blockchain and AI, and hopefully we'll touch on that a bit today, is massive. So the market cap of those AI coins is well over $40 billion at the time of us recording today. And you look at all those questions that are coming up with AI, and they're just so similar to what we were talking about as an industry 4 or 5 years ago. So pulling at those threads of, risk and compliance and cybersecurity. Is it good for society? Who should regulate it? Should it be regulated? So I think you kind of go full circle and it's like, okay, well, blockchain was new technology. Now it's less new. How far have we established? What have we got right? What have we got wrong? And actually, to come sort of full circle for me personally, and what was once super niche, and to be honest, probably a bit off the wall as an idea, kind of the DeFi. I'm about to join a FTSE listed company in the next few weeks. Unfortunately, it won't be announced. Hopefully by the time this podcast is out, I would have added it to my LinkedIn. But to have a FTSE listed company lean on me for my expertise is just not something that I would have expected when I first got into the space. And I certainly would not have foreseen, sort of 12, 18 months ago.
Yeah, at the end of the day, everyone likes successes. And then even the biggest crypto skeptics eventually flip when they see that, there's actual substance in it.
My Bitcoin has 10x'd over those, 5 years, right? It's certainly the best performing thing that I've come across. So I think even the people that didn't like crypto, all the kind of traditional finance companies, the big hedge funds, the asset managers, like you say, they've kind of been brought probably a little bit reluctantly to the table to start with, but I think now we're kind of convincingly DeFi positive, which is great for the industry.
You have a very diverse background, and as I mentioned earlier, you worked with CoinCover, which is, for those of you who don't know, it's basically a disaster recovery service. They have other services as well, and so on. But for the sake of the listeners that are not familiar with the term, what is disaster recovery? Who needs it? Who uses it? And so on. Yeah,
sure. So it's a while ago now. I worked for CoinCover about 18 months ago now. But crypto is super unique in that you can totally lock yourself out of your assets. So one of my favorite things to do when I'm public speaking, it doesn't matter whether I've got 5 people or 1,000 people in a room or a webinar or a podcast or whatever, is if you ask a group of people, please raise your hand if you have never, ever had to press, forgot my password, please reset it. There isn't, right? So crypto is unique in that you have your seed phrase, and most of the major exchanges, to my knowledge today, if you open an account and you fund it with, $1 or $100 million, at some point in that onboarding process, they will ask you to write your seed phrase on a piece of paper. Your bank doesn't do that. I'm looking at my second screen in my office right now. My online banking has certainly never asked me to do that. My email systems have never said, oh, just write it down on a scrap of paper, Katharine. And they don't ask you any sensible questions like, oh, do you have a safe? Or, do you have cleaners? And are they checked? And do you have a roommate? And what's the health of your relationship? Would your significant other try and defraud you? So it doesn't matter how much crypto you're holding or who you are, and particularly those massive institutions that now hold billions of dollars worth, particularly the companies using crypto as a treasury asset, for example, MicroStrategy, or some of those really big institutional investors like BlackRock and Grayscale and Fidelity, and even countries, right? Some of those countries are now using crypto, as official currency, like El Salvador. And interesting, even Donald Trump, as part of his campaign to become president, has talked about holding Bitcoin. So in order to not be locked out of your crypto, you need to have backed up. So there's a great case in the UK in Wales where someone had a load of Bitcoin held on their hard drive, and his partner accidentally took it out with the rubbish, right? So you need to have a plan for making sure that you do not lose your access. And of course, crypto is irreversible, right? So I know we're going to talk a little bit about some of the fraud that you see in traditional finance a little bit later on in this podcast, but those transactions can't be reversed, right? And actually, interesting, I'm doing some work for a firm that helps people pass on their crypto when they die. Actually, I am yet to find a crypto exchange that has a fixed process for being told that one of their account holders has passed away and that needs to pass on. So loads of good reasons to protect yourself.
That's actually the easy part, because in DeFi it's much more complicated, right? When you have an exchange, at least it's a legal entity that you can actually call or email or whatever. But when you're just talking about a non-custodial wallet, at the end of the day, nobody can help you.
Yeah, no, I think, if I passed one of my relatives, a device and said, look, there's $100,000 worth of crypto on it, I don't think many of my relatives would be able to get access, right? So there's two things: getting the access and being able to pass on the information to the right person, right? And even the exchanges where you say, well, look, they've got a legal office and you can write to them, very few of them actually have a defined process for that. And I've seen correspondence between people who are trying to release crypto from someone that has died, from a UK perspective, and they've been unsuccessful to do so. So interesting, I've worked quite a little bit in sort of cyber in the space, and particularly for one company that at the time was protecting a significant proportion of the total market cap of the crypto market. And some of the scams that reached my inbox, quite an unusual name, stuff I was getting to my personal email accounts and Facebook and LinkedIn, were really sophisticated. I remember going through a period of time where all I had was Facebook friend requests from very senior ranking American military generals. And I don't know anyone that works in the American military. And I'd Google reverse, I was very sure I didn't know this person, but I thought, just a bit bored at the weekend, I'll Google reverse image search. And they were literally like some of the highest ranking military officials. And I thought, someone has really put a lot of effort into trying to send me phishing attacks. So I didn't click on any of them. I was very well trained. I just ignored them and reported them. And I had lots of 19-year-old girls in bikinis, which I also declined. So yeah, I think some of those scams are just so sophisticated. And I'm someone that's in the industry, just for quote normal people unquote that don't have that skill set. It can be quite an off-putting process to have to go through.
So going back to disaster recovery, basically there more than rumors, there are actually some media outlets that covered about 50% layoffs at CoinCover. I'm less interested in the particular company, and they may have their own reasons for that, but I'm just curious about the industry as a whole, this whole industry of disaster recovery. What does it say about the industry as a whole when you see such a title in your newsfeed?
Yeah, I mean, I can't talk to what happened at CoinCover because, as I said, I've been out for 18 months or so now. But I think there's been significant periods of time where there have been, substantial layoffs in the Web3 space. Large firms, well publicised, on all the same, mailing lists and what have you, and trade publications that we follow. So, examples of that are, Fireblocks or Coinbase. And I think a lot of companies in our space overhired and probably were overvalued at the time by over-enthusiastic VC investment. And it's always probably been somewhat at the whim of the volatility of the broader crypto market. So look, we're defined by FOMO and FUD. So fear of missing out, fear, uncertainty and doubt are the two kind of polar opposites. If you look at CoinMarketCap, there's this beautiful greed gauge, which I look at daily, and it sort of swings wildly from one side to the other. And I think that is probably typical in immature assets and immature industries. But ultimately, it's really painful, right? It ruins lives, people's financial and mental health. And I've seen some really super talented people let go. And I've personally tried to leverage my network to help them find their next fabulous next role. We're quite an incestuous industry. People sort of move around a little bit. And I think, in terms of the culture of the businesses in our space, whether they're large or small, there are some amazing online resources where you can look into those cultures and see, is that for you? Are you comfortable with it? Whether it's Glassdoor or LinkedIn or just look, informal networks, people that you meet, in the course of your daily life, whether it's at networking drinks or a trade show or whatever. So I think you can find out quite easily what it's like to work in a business. It's not a nice to have in terms of culture. It does ultimately affect the bottom line. So, managers need to be cognizant of that. And I think maturity wise, there are firms with really notoriously poor culture. Word spreads really quickly if you've got an epically good or horribly bad culture. And ultimately, no firm will retain good people if they don't have that sense of purpose and a mission, and ultimately sort of a degree of psychological safety. So for me now, at the point in my career, I'm absolutely obsessed with culture. I'm a believer that culture eats strategy for breakfast. And what I mean by that is if you have one company with a mediocre product but fabulous culture, it will 8 days a week wipe the floor with a company that has a fabulous product but a totally rubbish culture. So I think probably a bit of work to be done in our space from that point of view.
Yeah, I think that's something that really manifests in our space, is the fact that this boom and bust cycles.
Yes,
it doesn't only, it's not only a feature of the tokens themselves, but it's also something that you see manifested in the companies as well, right? So you see companies that are on a hiring spree, and then they can just, axe 50% of the people, and it happens. It happens quite often.
Yeah, I agree.
So you've moved from working at a crypto project, Daxian, perhaps you could tell us a little bit about it, to an asset protection company, CoinCover. So you kind of seen, both sides of the equation, and you're also working with the VCs, as mentioned. What can you tell us about the awareness for security and safety in the industry? Not only in those companies, but after looking at some of the clients and some of the members of the ecosystem, what's your take on it?
Yeah, sure. So I've been really privileged to work with some of the industry's biggest names. So people like Fireblocks, BitGo, Pantera Capital, the government of El Salvador, Ripple. So, I have been in touch with some of sort of the great and good of our industry. So I think the horror stories are now well publicized, right? The guy that's lost, 500 million worth of crypto, that story is in the press a lot, right? So I think in the early days of crypto, a lot of the exchanges had complete freedom to do whatever they wanted. The regulation was super early. They could loan, they could stake their customers' crypto. No one really knew where it was. And I think now there's a lot more dialogue around where you should keep your crypto. Is an exchange appropriate for you? Do you want it held in cold storage? Do you want a device knocking around your desk somewhere? So I think looking at who you keep your crypto with and what their security measures are is much more talked about now in a way that it just wasn't, even to be honest, 12 to 18 months ago. So a lot of chat around not your keys, not your crypto. I think with those institutional investors, they have had some rightly high standards. And I think my view is that broadly has increased the standards of security across our industry. And of course, increasing regulatory clarity and interest in those security standards. I know we'll talk about that a bit more today. So look, there's a sense that good exchanges should protect their users' assets, right? We get hacks in our industry, and they're in the press, right? So, people are now thinking, well, I want an exchange that's operationally robust. It's great that these businesses are hyperscaling, but do they have the right platforms, processes, and people in place? A good example of that is I was working with a really well-known exchange about 18 months ago when the Ukraine was invaded by Russia, and basically. So many of their devs were there and then were sadly physically left without power to write lines of code. That was a massive problem, right, from a business continuity point of view. So look, I think there's a lot more chat now, particularly from exchanges, about engaging with regulators and being ahead of that regulation. And I have to shout out that trade bodies are a great way of doing that. There's a lot of dialogue now between the trade bodies, the regulators and government, which is fantastic. And of course, some really strong specialist tech vendors in the marketplace that are have great propositions that, make sure that cybersecurity is strong, it makes sure it's decreasing risk. And of course, they're putting out lots of education, which is much needed in the marketplace and for the consumers.
So it's actually a great segue because you mentioned regulations, and there's a lot that is going on in that field. Primarily MICA that is about to hit us at full speed in the beginning of the year, and only today there was some sort of a new clarification with respect to when it's going to be imposed, and you have some sort of a period where you can still kind of learn from that in the sandbox, but eventually 2025 is going to be the year of MICA.
Yeah,
So
sure.
what can you tell us, even if I'm putting aside everything that Donald Trump is going to bring in, which we don't know at the time, right? But from your perspective at the things that we see ahead of us in the beginning of this year, what kind of major regulatory trends do we see, especially with respect, obviously, to our dear security, compliance, and risk?
Yeah, sure. So look, when I first started writing about Web3 regulation, I was constantly talking about sensible coins, sensible exchanges, more regulation, not less. And I get some real flack online from kind of degen pirates that were like, no, no, we're outside the regulation, we don't need regulation. So that has been proven incorrect. We've had a lot of people lose a lot of money to scams and a lot of sort of bad actors. So I've been privileged to work with regulators in a number of jurisdictions. I think that regulation globally has been patchy. There are those that have regulated quickly and cleanly, and those people are now hubs for crypto and blockchain. They're creating stacks of jobs, places like Singapore and the UAE. The UK, where I'm talking from today, was super slow. We actually had a report from a group of MPs and peers a few weeks ago released, and I've actually made a few notes because I was really keen to quote this. So our regulator in the UK was blamed for being, I quote, doing too little, too late, or nothing. So that's not specific to crypto, it's across the regulatory board. Incompetent at best, dishonest at worst. Its actions were slow and inadequate, and its leaders were opaque and unaccountable. So from my perspective, talking to different regulators in different regions, the attitude to crypto and the speed of regulation and the levels of clarity sort of are so different all over the world, right? So ultimately, technology is often ahead of regulation. So it means that bad actors can flourish. If you've got kind of a regulatory grey area, that is just a carte blanche for people to create scams, and unfortunately people lose a lot of money. So often, from what I've seen, crypto firms have been very keen to do the right thing and embrace specialist technology within Web3 that reduces risk and protects its customers. But it's always a good thing to be ahead of that incoming regulation. So I would love to see in the next 12, 18, 24 months that, of course, there'll be differences across the globe, but overall as an industry, we reach an understanding of what the standards need to be. So it'd be great if there was regulatory clarity in every jurisdiction, but actually these crypto firms will just go to those areas where they know they can do good business. So I think there's two things that I would certainly pull out sort of coming down the track. So the first is that crypto is significantly political. So I know you said, let's not talk about Trump, but Trump is hugely pro-crypto. So the US's reaction to regulation for an extended period of time was, well, we're not going to really give clear rules. We'll just slap people with court cases, right? And that is one method, but it's not a brilliantly great method, right? It's not great for the firms. It's not great for making sure we have a strong industry. So Trump gets the top job, right? He's coming in due course. And he actually takes credit for Bitcoin's surge to 100K, right? So he put out a tweet on X saying, "You're welcome." And look, it jumped 50% on his victory, right? And it did that as he nominated a pro-crypto guy to a top job at the regulator, right? So a guy called Paul Aitken. So it's interesting that crypto is significantly political. I think it will continue to be so. And also that huge overlap between blockchain and AI that we've touched on. Again, I think there'll be a lot happening in that space in the coming months and years.
I think that, the biggest challenge that regulators have is obviously, again, I'm not saying anything new here, right? But to find that sweet spot where the market can flourish and people can actually engage and to protect the people. But
sure,
in my humble opinion, I think that they're focusing mainly on the investment side of things, right? Especially the SEC, and on looking for scams that are not really hidden. I mean, at the end of the day, investors need to do their due diligence as well, right? Maybe it's the libertarian in me that's speaking, but at the end of the day, you cannot regulate everything, especially when it comes to marketing. And I know that Europe is big on that, but in my humble opinion, it's an overreach. Having said that, some of the things that are really overlooked, those are the things that are really the black box of everything that goes on inside a crypto platform, right? Security, compliance, fraud, and I'm talking about authorized fraud, right? The fact that someone can actually trick you. And right now there's technology that can be put in place and implemented that can actually stop them. So, and this is not something that, the average investor can actually, research and figure out on their own. So I think that it would be a very, very good change if the regulators would focus on that rather than on, chasing every token, which is virtually impossible for those of us who are familiar
Yeah,
with the
sure.
industry.
Yeah, and look, I think the crypto. So I have a view on that, which is that the crypto industry is significantly crowded, right? Do we need hundreds of exchanges? Probably not. Do we need millions of different tokens? Probably not. So I think from a regulatory perspective, I suppose the $1 million question is how do you balance a need on the one hand for protecting users and the ecosystem whilst respecting the decentralized ethos of the industry. And I'm afraid I will probably be on this podcast for months trying to get to an answer to that. So I think my view is that most users of crypto don't want to keep their device. They keep crypto on a device that knocks around their desk, right? So, you've seen a slew of those bad headlines aimed at the largest of our exchanges, right? Binance, FTX. And that seriously affects trust and confidence in our industry, right? There's been massive systemic risk with problems with Silicon Valley Bank and FTX. It just shows you probably that the foundations of our industry were actually not that stable at that time. I love some of the industry commentary around Ledger taking up a password recovery service. I mean, the internet was utterly on fire, not helped by that news leaking out with some release notes ahead of sort of some official PR. But I think as the industry grows up and realizes that we need certain standards to get to the next billion users. So whether you're holding today $100 million of Bitcoin or a few $100s, we need to make the industry more accessible. And I think there is some fabulous work being done sort of from an infrastructure point of view to get to those high standards. And I think, those regulators are increasingly accessible and open to dialogue and need to be guided by those tech providers. So I think in an ideal world, the regulators should be ahead of the adoption curve. Unfortunately, that's rarely the case. So there's data out today from Glassnode, so we're here in mid-December, talking about that since the US election, roughly 200,000 Bitcoins have left exchanges. So that is a sign that Bitcoin is leaving those exchanges at a rapid rate, which is a sign of very aggressive buying from the institutions. So that's not going to keep happening if we have all these hacks and scams and phishing. So I think we really need to make sure the standards are high and stay high.
Yeah, so the question is how high, right? Because
Sure, yeah.
Coming from TradFi, if you're an FCA regulated company, at the end of the day, you have reporting, you have
Sure, yeah.
different monthly reports and quarterly reports, and you have to keep certain standards of KYC, and you have to employ a certain amount and certain quality of compliance people and so on. So crypto is not there yet. Do you think it will ever get there? Will it eventually turn into TradFi, decentralized TradFi, or will there be some sort of a sweet spot where we manage to regulate this whole thing and to organize it on a more kind of based structure, as you've mentioned, with Silicon Valley Bank and so on, but without going to those excessive requirements like we have in TradFi?
Yeah, look, I think one man excessive is another man's, quite sensible. So I think that there's a bit of a movable feast. What I can tell you is that the overlap between the old world and the new world is ever growing. So particularly as we've talked about, those institutions are investing so heavily in DeFi. So I remember being really excited a couple of years ago where there was lots of dialogue around that 1% of the portfolio should probably be in digital assets. And now I keep seeing 3 to 5. So it just shows you over a couple of years how much that's moved. So I think I go back to my point that to me the really interesting thing is where you get to that melting point with the best bits of TradFi and the best bits of DeFi. And that's the best of everything, the best people, the best processes, the best platforms, the best regulation. But equally you want to still make sure that there's interesting innovation and some good returns happening there, right? So I think the thing that is really interesting is I feel, I'd be interested in your take on this, that there is overall good support. We should have high standards. I think what's probably a little bit up for debate, I think, within the industry is whether those standards should be compulsory. So look, everyone thinks protecting their users is a good thing. Let's make sure people don't lose money and people can trust us. Let's make sure there's no systemic risks and people are accountable and we can welcome all these TradFi participants in. I'm not sure, but it conflicts with decentralization is a strong argument. I get it, it's a philosophical argument. I'm not sure if it works in practice. From what I've seen, I'm willing to be convinced, right? I think what's more interesting is, do we stifle innovation? You use the word overreaching, which is interesting to me. So is it stifling innovation? Is it too much cost, which ultimately gets passed on to the consumer. And actually, there's some interesting things happening in payment space in the UK right now. So look, should it be mandatory? Should we enforce insurance? Insurance is a really tricky thing in our industry. What can you insure? How good is that insurance? I suppose almost how compulsory is some of this stuff, right? Are we just going to allow users to make their own decision, or do we just say this is the gold standard? And finding that middle ground, I think, just varies so much depending on who you're talking to. If you go and talk to someone that's really into DAOs, they'll give you a very different answer to someone who's, in a hedge fund and trying to build what's essentially a TradFi business out of DeFi assets. So yeah, I think you'll be aware there's just so much variety within our space. There's some very diverse priorities.
For sure. You talked about the UK regulation, and recently there has been quite interesting development there. And you also talked about payment service companies and so on. So the recent app fraud, the authorized push payment fraud regulation that came out of the FCA. In essence, in 2 words, and feel free to correct me, but from what I understand, PSPs primarily, payment service providers, but not only, crypto platforms as well, will be basically obligated to reimburse their clients in case they are defrauded. And most commonly, we're talking about pig butchering, and we talked about this on this podcast quite a few times. It's quite, revolutionary, quite way of regulating it. I think that there has been a significant change in the UK with respect to understanding the liability that those companies have with respect to how they run their platform, when they understand that eventually they have to reimburse their clients if they get frauded. So I'm just curious to hear what's your take on the app fraud FCA regulation.
So I think it's a very interesting question, right? So that boils down to me to if there is fraud, who assumes responsibility? And that is just such an open-ended question. So to my earlier point, most regulatory standards in TradFi are bleeding into DeFi. My personal take is that's broadly a good thing. And ultimately, crypto needs to be part of the payment rails to reach its full potential. This is the US, not the UK, but there's a few court cases going through in the US where platform users are taking action against exchanges because they've been scammed. Coinbase, last December, so a year ago, was sued by a guy called Jared Ferguson, who lost 90% of his life savings when his phone got hacked. So that's a really interesting question. Is that the user's fault because his phone was hacked, or is that the exchange's? And his argument is actually the exchange should have seen it was a fraudulent payment. And I think, I'm not familiar, I haven't seen great detail on either of those cases against Coinbase, but ultimately there are technologies from providers that will find most of these fraud cases right. So I think for people in the UK on that APP fraud regulation, of course you want to protect vulnerable customers, of course you want trust in digital payments. And it probably, as someone that has spent time in traditional finance organisations, seeing the snail's pace that they innovate at, forcing them to come to that process, kicking and screaming, is not a bad thing. So some of the feedback, and I'm not super involved in the payments industry, is that it's creating a huge amount of manual processing, which again is interesting from a tech perspective when there are providers out there that can assist. And there's definitely some very variable engagement across the sort of payment firms with that. And I think there's been some really interesting stories, it's of unintended consequence really, where firms have reported a spike in cases where some men typically are trying to successfully claiming reimbursement for payment they've made to sex workers after a heavy night out, right? So
Wow.
Of course that is an unintended consequence, but it's kind of shifting responsibility to banks. So is that a moral hazard? Are you sort of incentivizing the risky behaviour? Is that an unfair burden? And ultimately there's a huge cost to that. There's a compliance cost, can it be insured against? What is the demand for resources? And does that ultimately put costs back onto the consumer, and does it stifle innovation? And I'm not sure we've got far enough into that process to really know. There has been significant concern from the payment industry. And I can't answer honestly today whether it's over-regulation. I think I've known for a number of years that if I buy a good or service on my credit card and it's not what it purported to be, I got scammed for a pair of wellies on Facebook Marketplace, I'm ashamed to admit. So PayPal very kindly put that right, because I'd lost 50 British pounds to a fraudulent pair of wellies. But actually, if I'd done that in cash to someone on the street, I wouldn't be able to do that. So I've known for a while that I have significant protection on my credit card, which is wonderful. I think I've had a small amount of fraud. Someone went and filled their wellies in the Apple store in Las Vegas about 15 years ago, which, again, I could put right. So I think having the same level of trust in a high street bank is good, but whether or not that is sort of overreaching and over-regulation, I think probably sort of remains to be seen. And I think, it's always quite an exquisite balance between holding a financial institution accountable. And look, these institutions, don't feel too sorry for them, they're pretty profitable, without creating disincentive for users being vigilant, and high levels of innovation is a difficult path to plot, I think.
Yeah, and I think you made a good point about court cases, right? So putting regulation aside, at the end of the day, if someone got defrauded, or if a payment service company or a crypto platform facilitated some sort of fraud scam, or even some misinformation, right, that eventually led to someone losing their money, they have a very good case in court. And I know that, for instance, in the UK, and I was just talking a few episodes ago on the podcast with Todd Wade, and he was mentioning quite a few court cases in the UK that were very successful against exchanges. And yeah, that's something that we're going to see more often. And if not the regulation or the intrinsic morals of the company leaders, at the end of the day, maybe the court cases will lead the companies to actually act.
Yeah, I've spent time with Todd Wade, actually. He wrote a very interesting book about protecting yourself from scams. And ultimately, do we think that, vulnerable users will, be able to understand a level of information? Probably not. So how we protect these people, I think, is a very interesting question. I'm not sure I have the answer. I think we'll have to plot a very sensitive path through that in the coming years.
Sure thing. So we're approaching the end of the podcast, unfortunately, but I'm really curious to hear. So you've worked with quite a few VCs, VC-backed companies. You know this whole fundraising space quite well, as well as the industry itself. How do you think that the current bull run affects the VCs, or even the process of fundraising in this industry? Is it going to be easier for projects to raise money? I'm putting TGEs and everything aside. Let's talk about equity raising. What's your take on it?
Yeah, sure. So I have helped a number of firms in their fundraisers, and I've broadly found that the VCs are sort of easily accessible and broadly supportive. So if you are a founder that is trying to raise money, I personally have found that the VCs are, interested in talking to you. So I think, there was a period of time which the VCs were really focused on exchanges. Now they're more focused on specialist tech firms within the ecosystem, which makes perfect sense because it's those firms that will allow the Web3 space to reach its full potential. So a couple of incoming trends that I see from MICA is that focus on infrastructure and interoperability. So we don't want to be a disparate industry of a whole bunch of different firms doing their own thing in their own silo. So those layer 1 and layer 2 solutions that work to improve scalability, security and interoperability. So those projects are crucial for the long-term success of our industry. So that's a big one. Tokenization of real-world assets. You see RWA absolutely everywhere, wall to wall, and that is a multi-billion-dollar opportunity which gains traction every day. We should be able to tokenize pretty much anything. Obviously, real estate and commodities are probably the first port of call, and that's going to make a huge difference in terms of enhancing liquidity and access to investment opportunities to communities that traditionally haven't had that access. AI and blockchain, and we've talked about that a bit today. Really interesting. Again, really early days. I think we'll see some really interesting players, well over $40 billion worth of value already in those crypto AI tokens that I see as growing. Web3 gaming and metaverse, that went a bit quiet for a while, but I think there's huge overlap there, and there's lots of opportunities for social interaction, even for those people that haven't sort of normally liked it. And of course, you can earn and store digital assets. Lots of reg tech within Web3 as part of that regulation maturing. I see a bit of technology for DAOs, so anything that helps governance and organisational structure. Obviously, the whole point of a DAO is community-driven decision-making and transparency, and we haven't always had the technology to back up what's clearly an interesting idea. And finally, NFTs. I think the NFT conversation got really clouded by, do you want to spend a couple of million on a picture of a bored monkey? Yeah, well, do you want a picture of a bored monkey on a yacht smoking weed? Probably not. So NFTs can be used for a whole bunch of things, where trust and provenance and supply chain, whether it's your posh handbag or a vaccine or a bottle of olive oil. So I think there's a huge amount within Web3 that there is still significant interest from VC.
Very interesting. Catherine, I think it was a very diverse talk. We went from, talking about your background to regulation to security, coin cover, finished with the NFTs of a monkey smoking weed.
Yeah.
So I think we covered everything. Catherine, thank you so much. Any recommendations, anything that you would like to mention? Where can we follow you?
Yes, LinkedIn is a good place to follow me. I'm always delighted to hear from anyone in the space, and also very keen to give back. I'm very passionate about the ecosystem itself. So yeah, feel free to reach out or follow me. I'm always happy to connect. Thank you very much.
I'm definitely following. I know that you're posting quite extensively on LinkedIn.
Yes,
you're everywhere, every conference in London.
yeah, I get about a bit. Yes, and also very keen to, I'm starting a new role, hopefully by the time this podcast goes out, for a FTSE listed company. So I'm very excited to I've very much started in the weeds of Web3, so now to be talking to some of the world's biggest institutions is going to be fabulous, and something I'm very proud to fly the flag for Web3 on.
So thank you so much, and tons of luck in your new role.
Thank you.
And I'm sure we'll talk again.
Web3 Watchdogs is sponsored by CyVers, your one-stop shop for Web3 security and threat mitigation. CyVers harnesses the power of AI to eliminate hacks, scams, fraud, and compliance challenges in real time, and even before they happen. For more information, visit cyvers.ai. That's CYVERS.ai.